This episode is sponsored by City Traders Imperium. CTI is a prop trading firm looking for profitable Forex traders who need more capital. CTI will back its traders up to $2 million, which is the most in the industry, and thousands of traders worldwide are trading their capital remotely from their own home. It's the most flexible funding provider in the industry, where any strategy is welcome and overnight or weekend positions are allowed. Plus, CTI doubles your account every time you hit 10% net gain, which you can scale up to $2 million. Click the link in the description to find out why City Trader offer the best funded trader program in the industry, or visit citytradersimperium.com. All right, folks, we're here on Build That Bot, Trading Up podcast YouTube channel. We've got MomoForex on the show, and he's going to help us build a trading robot, and I'm going to build the bot. I'm going to build that bot. So, Momo, welcome to Build That Bot on Trading Nut. How are things with you?
Going great, man. Things are going fantastic.
It's been a while, actually. I was just having a look. It was episode 61 of the Trading Up podcast, which was January. Actually, it was only January 2020. It was the beginning of this year, before the whole pandemic kicked off and it went crazy. So it's been 2020. How was 2020 treating you anyway?
Amazing. I'm loving this year. Absolutely amazing.
So everyone else is in turmoil. Momo's killing it. Right. So I'm going to hand it over to you, and let's just see what you've got for us in terms of a strategy, and I'll jump in there and let you know if it's going to be easy enough to automate, or how we can potentially tackle some of those more challenging situations. So over to you, Momo. What are you thinking?
First, we can, because I have two trading strategies I use. I have price action and I have divergence. We can start with price actions. Price action is an easier strategy to explain and to map out and all that stuff.
Cool. Well, let's start off with that. You've got a price chart there for us, so let's dive in there. And how do you want this robot to work?
So basically, first it has to identify the trend, know if we're going on an uptrend or on a downtrend, and then it has to identify the key levels that price interacts with the most, and then depending on what trend it's at, it has to look for an entry at the level.
Okay.
So trend, level, and signal. The signal at the level.
Okay. So all right. So the first thing is, how do you think we'll identify the trend? I mean, where would you consider a trend to be persistent at what level? So you're on the 4-hour chart here. So how would you pick a trend?
So what it can do is, for example, let's say it can, like, I'm not sure how the robots work, but it can measure the extreme high and like the most extreme low, and it can like see the distance compared with a little bit of previous market data from there, and it can identify, okay, is this going up or is it going down? What is the most recent trend? Because that's what we want to focus on, the most recent market trend.
Okay, so extreme high to extreme low. Now I'm just trying to think that could be a little difficult. What if we went up higher time frames? And we sort of said on like a monthly chart or something.
Monthly? That may be a bit too high.
We'll
go with daily, I would say.
Okay, so if you went to daily, because extreme high can be deceiving with a robot, because you could pick, for example, I think I've got you could pick that as the extreme high as opposed to that, because you haven't gone back far enough. So how far back would you have to, or if you were there, or let's say if you were here, you go the extreme high is there and go, oh, we're in a downtrend. But in fact, you can clearly see we're in an uptrend. You see what I mean? So that's where it could be a little bit confusing for a bot to try and pick accurately. Right. Is there another way that, I mean, I have used in the past moving averages to do that. So there's a cross of a moving average, but they are typically quite laggy. Is there anything else like what about a Bollinger Band, where price is sticking out of it, and we could go, well, it's hit the top Bollinger Band and it's coming back down, so therefore we can say we're in a downtrend? Do you think that's possible?
So what we can do, another thing that could be possible is we can also look at market structure. So let's say price is forming, like let's say in this case, it's a downtrend. If the robot could identify lower lows and higher, and lower highs, then that would indicate that it's going down. It's a downtrend. So if that's also something that's possible. If it has a series of lower highs and lower lows that indicate a downtrend, and if it's on an uptrend, if it has a series of higher highs and higher lows to indicate that the price is going up as well.
I think that's possible. I think we could do that with the fractals. So
Nice.
yeah, so it's just seeing that the fractals are starting to get lower on the tops, and that the fractals on the bottom are starting to get lower as well. So you've got lower highs and then lower lows as well. I think we could do that, fractals. So maybe if we looked at sort of, for example, the last 4 major fractals, and I can do that, I can code that. So maybe we'll do that. We'll use fractals, shall we?
Perfect.
Okay, cool. We'll lock that in. So what that means, folks.
I'm familiar with fractals, but yeah, you can go.
Yeah. So if we zoom in here a little bit, yeah. So what we're talking about here, folks, is I'll just grab the mouse now. So that would be a fractal high. So we're looking for, one candle up, the next candle to be lower, and you can do like over 5 bars and going, okay, that's the high point here. And then we're looking for the next one, which will be this one here. And so we're going, okay, that one there is higher than that. And we're saying, in this case, this one here is lower than that. And so therefore we know we're in a downtrend. Yeah. So that's like how I would automate that. So I think that's cool. And we've got another one here, which is just confirming that, so that that one there is higher than this one here. So we're still, so we can definitely confirm that way that we're in a downtrend, which is fantastic. So what was the next thing that you wanted to add?
So the next thing would be to identify the key levels. I'll switch back to our 4 time frame real quick. So as you can see, this is a very significant level, and price loves to interact with this level. Either we have strong buyers or strong sellers at this level. Either price comes to this level, bounces away, or it comes and quickly breaks. And if, depending on the trend we're on, it could come back, retest that level, and keep heading downwards. In this case, since we're on a downtrend. So the second thing would be to identify these key levels. Instead of the robot marking out any random place on the chart, it should mark up like a zone like this that price always bounces away from or just cleanly breaks. Okay. It should be a zone where we don't see a lot of range. We always see immediate market interaction when it gets to that level.
Now that in itself is it can be quite difficult. I've got to say it can be quite difficult because you're sort of like trying to. It's very discretionary, and for a robot to be able to go, oh, that is a level because these things aren't hitting the exact level, it can be quite difficult to do. So what I would recommend, and look, this is sort of taking it further away from your sort of strategy, but trying to stick to it as much as possible, is like an indicator that provides these sort of key levels, like a support and resistance indicator, a custom indicator that I'll have a hunt around on the internet, see what I can find, and hopefully it gives us something that's close enough to this. The other way, there's no real other way that's going to be easy to do without making it sort of limiting the number of trades that we take. So I think that could be the way to go. So we find a support and resistance indicator, load it in, and we see what it does.
For sure.
Cool. Okay, brilliant. Guys, just jumping in here quickly. Now, first of all, sorry about the audio on this video. It's been pretty average. We had some issues with my PC at the time, so sorry about that. It'll be better going forward. Now, I did want to quickly talk about the fact that I struggled to find a key levels indicator. I did go off after the video and have a hunt for one. Struggled to find it, but what I'm thinking of doing is using this thing called adjustable fractal MT4. So you can set this to do more than what the standard MT4 fractal indicator does. And what it does is it basically means you can look for I suppose fractals that are 20 bars up, 20 bars down. Then you draw the fractal level, at which point we can start looking for key levels. So if you can see these points are quite, can come quite close together. So this one here is only like 13 points on a 4-hour chart away, so 13 pips on a 4-hour chart away. So you start to draw these out, and you can get your key levels that way. So that one's looking pretty good. This one's almost. There are definitely some good key levels in here. Let's keep going forward. Where did I see? Here we go. Like you can see here, there's like 3 points here where you've definitely got a key level. This one here I drew before is still a key level. 1, 2, 3 points. I'm thinking I'm going to have to sort of bring them in and delete them, because I think like just leaving them there, I'm going to end up with lines all over the chart. But you can see here another one, and you can see here another one. So I'm thinking this might be the way to draw my key levels, and then we work out the rest of it after. It's a little bit more difficult than what I was hoping, because a custom indicator does save me a lot of time. But hey, it is what it is. Now, look, if you're interested in finding out how I do what I do, then head over to tradingnut.com. I've got a page there where I talk about my Robot Builders Club. This is one of the robots I built. This is the Nick Shawn robot. So I know Nick and Momo are partners. Now, this is the Nick Shawn bot. I'm going to walk through this bot with my Robot Builder Club members who are going to get access to it this August 2020. If you're listening to this a little bit later, which I'm sure there's going to be plenty of people doing that, then sorry, but that offer's probably gone. So, have a look, have a hunt around. There'll be links underneath this video with a coupon code as well if you want to get access to this. It did do really well. It had like a 70% win rate here. I think up to 92% win rate. There's a video as well which you can check out. There's a lot of equity curves that sort of look a bit like this. Anyway, I digress. Let's get back on with the rest of the video.
And then the next thing would be, okay, so my entry levels and price action analyzation is basically the same, but my entries, I have 2 different separate strategies in price action that I use for entries. Either price goes to this level, like assuming we identify the trend, we identify the level. What I want to see is price go back to that level, and either I see multiple rejection wicks at that zone, or I see a clear engulfing bar. And how I spot out my engulfing bars are, let's say in this case, since we're on a downtrend, I want to see a bearish engulfing bar on this chart, a red bar, engulf the previous green candle, including the wick. So the body of that red candle has to be bigger than the previous green candle, including the wick, and it has to happen at that level. So that's the engulfing bar strategy. And for the just typical break and retest, I want to see price get back to that level and show us multiple rejection wicks at that zone. So in this case, we want to see a few bearish rejection wicks as price comes back to this level right here.
And that's easy enough to do. So that is the rejection wicks are a little bit more difficult. And engulfing bar should be easy. I think the issue you'll get with the wicks is how many is multiple. I mean, you could, because you're going to need to sort of work out, do you enter on the first one? Do you enter on the second one? So it'd take more than 2. So 2 or more. And so, okay, so that makes sense. We can do that. What about stop loss and take profit?
Yeah. Before we go into that, the engulfing bar is a more consistent strategy. The win rate is a lot higher compared to just rejection wick. So yeah, that could be like the main focus. And we can also test out another robot that checks out rejection wicks. But because scanning the charts on those 2 price action strategies is like the same thing,
Okay, cool. We'll just go with engulfing then.
Exactly. So for stop loss and take profit, let's say in this case, you enter in short, your stop loss should be, it's very discretionary here. I would say in this specific case, I would put it above this wick right here. So this is the most previous zone where you've seen some market reaction right here. So I'll put it above here. And I'll put the take profit at the next level right here. So all the way down here.
Okay.
Yeah. And the close of these candles.
So it's very much whatever indicator I find, which I've used one before, which might be okay. That'll be key for the exit. The stop loss, we might just have to look at where that next level is and go, let's just take, if that's if that's say 100 pips away, then maybe we say, well, look, we're happy with a 2-to-1. So we put the
that's what I was about to say.
Yeah.
So we can have like a 1 to 2 may reduce the win rate. So we can have, let's say, I mean, a 1-2 would still be fine. We can test that out, and we can test out a 1 to 1.5 as well to see if we'll have a better a win rate.
Yeah. Well, the beauty of this is like we can test everything out, and it only takes a couple of minutes to run a test, and we can see which win rate would work best. The other thing we could potentially do is like use an ATR stop loss and take profit and go, okay, well, look, let's just use an ATR and not go for that next level. I always like that one. It seems to work quite well with certain pairs. So that looks good. I'm happy with that. I think that's the difficulty for me is probably going to be finding that the perfect support and resistance indicator, but we'll find one. We'll find one. And timeframes, currency pairs, what do you recommend?
Currency pairs you can use as much as you want, like as all currency pairs. Very, very good. Because I use my strategy on all these currency pairs I have right now.
So that's including indexes as well, and
these are just stocks. So everything above this Tesla stock right here, including indices and everything, I'll use the same strategy, the same way of analyzing the chart on all these pairs.
Cool. Okay, and what about time frame? You've got the 4 hour here. Do you recommend we stick with 4 hour?
I would say 4 hour, hour 1, and minute 15. Those 3 time frames.
Okay, cool. So it can be used on those three time frames. Brilliant. Well, look, I think this is a nice little strategy. So we're going to use the fractals. We're going to just focus on one time frame at a time, get the higher highs, higher lows for direction, and then try and find some sort of support and resistance indicator, unless I come up with some other way to do it, possibly using the fractals. I'm not too sure, but we're going to look at that, then find the pattern. This is all doable, and we're going to enter the trade on that. Oh, sorry, yeah. So once the candle closes on that engulfing bar, that's when we would enter the trade, right?
Yes, and the engulfing bar, the body of that engulfing bar has to be bigger than the body and the wick of the previous candle. I can show you an example, like this red candle completely bigger than this green candle, including the wick. So that's how the engulfing bar has to be, much bigger.
And what if the engulfing bar, like, sort of is so big that there's not enough room for the next level? So say for example, the engulfing bar is like 25 pips, and then the target is 10 pips away from the close of the engulfing bar, and then your stop loss is going to be leave it. So it needs to be at least a 1-to-1 risk to reward to that profit target.
Exactly. For sure. At least a 1-to-1 at the very least. For sure.
Okay. Cool. And so I suppose on the M15 hourly, any times of the day that you wouldn't want to trade?
No, not really.
And anything around?
The only thing is it could avoid right when the market opens on Sunday. Like, let's say it can wait for 3 hours after the market opens on Sunday, and between the daily candle closes, because there's a lot of spreads during those times. It could leave out 1 hour before the daily candle close and another hour after the daily candle closes as well.
Perfect. Okay.
And let's say 1 hour before the market closes on Friday as well, or 2 hours before the market closes on Friday. Yeah.
Okay, cool. But you're happy to keep the trades open over the weekend?
Yeah. Keep the trades open over the weekend.
Okay, cool. Brilliant. All right, all very doable. Well, look, Momo, thank you very much for coming on Build That Bot. Now, what's the best way for the guys to find out more about you?
You can follow me on Instagram, MomoForex, Twitter, MomoForex, Snapchat, MomoForex. But the best way is Instagram. That's where I'm most active and more follows and all that stuff. So check out my Instagram if you want to get in touch with me.
Brilliant.
You can also check out my website as well, lucidfx.co. That's my company name. If you want to learn about how I trade Forex and how I, teach and all that stuff. Free training on the website. If you want to, just learn a little bit about my strategies and know a little bit about more and a little bit more about me and my company and all that stuff.
Cool. Okay, brilliant. Look, and also, guys, there's a link. I'll put a link below this video to a little wee discount that you can get on Momo's course if you go through that link. Yeah, look, guys, do remember, subscribe to this channel, not just to see more videos like this, but to see what we end up with here. We're going to get Momo back on, and we're going to check out what this robot looks like in a back test. And we're going to go through a few back tests, see how it performs, and potentially change things. Who knows where it will go. So yeah, guys, do click subscribe and hit the notifications bell, and then click all so you don't miss these in the future. All right, thanks folks, see you in the next one.